friends, welcome to Nirmal Bang. I am Piyush Jain, and today we are bringing to you a new company which is bringing out its IPO very soon, going to be listed on the bourses. We are talking about healthcare products distributor who has made rapid strides over the last 5-6 years. The name of the company is Entero Healthcare Solutions Limited. Joining us on the show today is the managing director and CEO, Mr. Prabhat Agrawal. Prabhatji, welcome to the show.
Thank you so much. Thank you, Piyush.
Uh, प्रभाजी let's talk about the journey. Always a distribution network जो भी सेटअप किया जाता है किसी भी बिजनेस में किसी भी सेक्टर में इंडस्ट्री में उसको काफी टाइम लगता है काफी मेहनत लगती है सेटअप करने में अक्रॉस इंडिया इज अ बिग कंट्री तो फ्रॉम दैट पर्सपेक्टिव आप हमें प्लीज समझाइए कि जर्नी कैसी रही आपके लिए किस तरीके से ये पूरा थॉट आया किस तरीके से आपने सेटअप किया
जी बिल्कुल. So we started this company in 2018. Myself and my co-founder Prem Sethi. Okay, and pre 2018, I was the chief executive officer for Alchem Laboratories, which is one of the largest pharmaceutical company in India. And we did IPO also of Alchem in 2015 December. Okay. We were all both Prem and myself. We were like a corporate professional. Before starting this entrepreneurial journey, right? So we had worked in various corporates, across the world. I have personally worked in so many corporates: Aditya Birla Group in India, Hero Honda Motors, Alchem Laboratories, multiple places. In terms of my educational background, I studied finance. I'm a chartered accountant. I'm a CFA charter holder and also MBA finance. Right? But then, after, doing a lot of finance jobs, I moved into management, strategy, operations, and all that. So this idea, about creating a pan-India distribution model in India was a very exciting, vision for us. Okay. And this kind of model exists across the world. If you look at in US, European markets, that is the model that works there. Right? Even in a country which is close to us, China, so all these markets you have pan-India distributors who are catering to all parts of the country and having a very dominant market share. Okay. And they work with multiple companies with all customers. But in India, distribution has always remained a family business. It has mostly remained a unorganized business, generally driven by first generation business person or second generation, right? It has never been organized, and institutional money never flew into this sector. And so what we saw that in India, this is the situation globally, it's very, very different. And if somebody is able to create a pan-India technology-driven integrated, distribution services across India, that will add a lot of value, not only for the companies that we work with, but also for all our customers, right? And with that kind of a vision, we started this company. It has been a 5.5 year old journey, and I can tell you that in 5.5 years, every day has been very, very exciting for us, and whatever hypothesis that we started with has played out very, very well. And that's the reason why in such a short period of time, in 5 years time frame, we could create such a massive, supply and a customer base. Today, if you look at, today we are, supplying to 80,000 plus pharmacies. India has close to 900,000 9 लाख रिटेल pharmacies हैं. तो ऑलमोस्ट 10 में से एक लोग तो हमसे खरीदना शुरू कर दिए. Even though we had a very limited history. Almost 3,500 hospitals, big chains, medium standalone hospitals. We are the largest hospital supplier in this country. We are working with 1,900 plus pharmaceutical companies, healthcare companies, right? So whether medicine suppliers or equipment suppliers, medical device suppliers, so all these companies, we are working. We are one of the biggest range, 1,900 plus pharmaceutical company का relationship बनाना in 5 सालों में, इतना बड़ा customer network बनाना, that has only been possible because, we believe that the right to win is extremely clear in this market for a pan-India tech-driven distributor like us. It has not been an easy journey, but I believe, if it's a tough journey, then it is very difficult to displace you also. Because the more the hard work that you put, the more entry barrier you create for others.
Of course, because economies of scale kick in. Actually, that's how actually we create a moat from that perspective. Help us understand, sir, because I'm looking at the numbers. You're talking about almost 80,000 plus pharmacies, as we were just talking about, almost 3,400 plus hospitals, as I read your RHP. There's also 73 warehouses which have already been covered. Would like to know basically where we stand out of the 6 months of FY24. Also, again, almost 495 districts being covered. Help us understand how has been the investment intensity right now. What is the sort of current status in terms of your storage capacity? And is this investment intensity going to continue for the next 12, 24 months? Where are you on that basis?
Yeah, so in the you always start the business from scratch, right? So investment always is upfront and the returns are later, right? So we created this massive infrastructure in 5 years time frame. We have 77 warehouses with 4,65,000 square feet of warehousing space. But it's not only the physical infrastructure. A huge amount of customer network has also been created, and at the same time supply network has also been created, and all the technology that we have put in place, we developed in house, all that has been created, right? So a lot of work has been done. Now it's the time for us to use the benefits, or leverage on this infrastructure that we have created, right? And so in future we don't expect our margins, for first 6 months of this year we were doing a 3% EBITDA margin kind of a thing, right? We have been profitable from year two of our operations. Very few startup, if you look at, have been profitable from the beginning of the operations, right? In spite of making all these investments. So at an operating profit level, last year also we had an EBITDA of 85 crores. This first 6 months of the year we had an EBITDA of 61 crores. This first 6 months of the year we also had a PAT of 11.5 crores. Right. So after taking out interest costs, depreciation, amortization, everything, you know, we delivered a positive numbers. Right. So now this is only going to stand. And as you mentioned, once you build a scale, once you build a very massive scale, automatically lot many customers get attracted to you, lot many companies get attracted to you, various kind of collaborations are possible, and all
Right.
this is things to play out.
So my question, sir, is what is the reason for losses over the FY21, 22, 23 must be linked to investments or depreciation? Like, help us understand what is the reason linked to losses in the 3 years?
Underutilization of capacity. So we set up warehouses, we set up the team, we invested in technology, right? So the business comes gradually. Always you have to put investments before the business comes in, right? So that
And
is the reason.
so what was the utilization in FY22, then at 23, and now where it stands?
Yeah, so now we have, on the same infrastructure, on same this thing, the business continues to expand, so the incremental cost is not in the proportion of additional revenues, right? So
No, no, sir.
the operate,
What's the blended utilization level now of your capacity? Because you have
so
turned
we,
profitable.
yes, so if you look at our warehousing space, we are increasing our throughput of those warehousing space. From the same warehouses, we can do 1.5 times, 2 times more sales than we are doing now, right? Because we have set up all these, not keeping 1 year or 2 year in view, right? We have invested in this with 5 year view in mind, because you can't change warehouses every year, no. But business
No,
is
no.
scaling up so rapidly.
What I was asking was, I was trying to figure out something would have triggered. For example, FY22, between FY22 and 23, your revenues actually largely increased by more than 30%. Your losses basically more than halved. And now, basically, for the first 6 months of FY24, you have turned profitable. So, I was trying to ask you basically, utilization must have jumped by leaps and bounds. So, is there any sort of metric or any sort of benchmark where you know that the utilization level has but now actually jumped to this much level?
So
So that we know
if you look at
what.
in the first 6 months of the year, there are many things that have happened which are going to continue. One is our gross margins itself has increased. We were
Why it is it?
doing,
Why it is increased?
yeah, for two three reasons. We started providing a lot of value added services. So we are not only doing distribution today, but we are also doing marketing services for so many companies. We are taking end to end responsibilities for for the entire India business. For example, for Roche Pharma, couple of other multinational companies, entire India business is being taken care of by us, right? So those are higher margin businesses, right? On the distribution side, as our scale is going up, we are getting better pricing from the companies. So we are one of the biggest buyers of pharmaceutical products. So as scale grows, we enjoy volume discounts, we enjoy turnover based discounts from those companies. So as the scale goes up, your gross margins also expands. The share of private label goes up, so that also adds positively to the margins. The operating leverage kicks in, which has kicked in, right? So all these are the 3 4 reasons why margins have expanded in this year,
Are
and
you
it's
are you are you looking to continue your generic white label brand, or that is something you are going to scale it down?
So on medicine side, we have scaled down. On devices side, we have scaled up. So on the devices, like for example, we are selling products like digital thermometer. We are selling products like nebulizer. Products like adult diapers, product like surgical examination gloves. These are the products where there is no prescription from the doctor. These products are sold based on availability, pricing, and good quality, right? So there we have a good right to win because we take out a lot of intermediaries from between. So we get it manufactured, from the good quality manufacturer, and we are the marketer as well as distributor. So we have both the margins available with us. So there are only
Hmm.
three people involved: the manufacturer, us, and the retailer. Because we do
Okay.
our own distribution, we do our own marketing.
Right. And what's like the margins must be far higher in the equipment space, right? So, right, versus the medicines.
Yeah, on the devices side, the margin structure is generally higher than the medicines.
What's the
So even
difference? What is the
almost
revenue
10 times.
between the equipments and the medicine right now for you?
For us, 90% plus is medicines. Less than 10% is other products. But we see that other see at the end of the day, we are reaching out to pharmacies and hospitals. Both the products are being sold here only. In hospital uses implant also, stents also, medicines also, needles also, syringes also, right? So gloves also. So our idea is to create a customer base, and get a foothold in those customers, and then you also sell higher margin products in the same customer base. Because the cost is the same. The distribution cost will be the same, distribution infrastructure will be the same, the sales infrastructure will be the same, the collection infrastructure is the same. So there's no on the same setup infrastructure, you offload lot many products, more higher margin products, and improve your margins.
Right. So, help us understand how much funds you're raising from this IPO and the usage of the funds.
So we are raising 1000 crores from primary, right, out of which 142 crores is going for repayment of debt. Around 480 crores is going for working capital, because this is a trading business, right? At the end of the day, it requires working capital, right? That's the main raw material in this business, right? So we are raising almost like a permanent working capital through this thing, so then we can drive very aggressive future growth. And around 350 crores will be used for inorganic as well as for general corporate purposes.
Okay, sir. And after the repayment of debt, what is the debt which is going to remain on the books?
So today we have around 350 crores of debt, end of September, right? All of which 142 crores will be paid.
Okay. And the remaining must be the working capital debt, sir, right? Or it's a term debt?
All
Term debt.
working capital, all that is related to working capital.
Okay. Okay. Sounds good.
Our working
Sounds.
capital, days are close to 60 to 65 days. See, basically, this business model works on a high return on capital employed, right? We work on a high ROCE targets. And it is very simple. Even if you make a 5% operating margin in this business and rotate your capital 6 times, you end up making 30% return on capital. No, that's the target with which you work on. It's a
That was my next question, sir. What's the asset turnover right now?
So on a working capital, which is basically 80-90% of our capital, because fixed assets is very small for us. For 4,000 crore business, we are only deployed 40 crores in fixed assets. Okay, most of the capital is in for working capital, and working capital cycle is 6 times of sales.
So, sir,
Right?
your
One
ROC,
rupee of working capital.
your ROC is right now 6%. So, what's the sort of your own ambitious?
No, so ROC, if you look at first 6 months of the year, is more than 10%,
Okay, fine.
because the numbers in this you can't annualize, right, in
Yeah,
the document.
right. So that's interesting. And how the sort of plans looking up? post this IPO, are you looking to sort of invest more, or we have reached some sort of maturity now in terms of your?
We are far away from maturity. The market is 2,70,000 crores in India. The market itself is growing 10-11% year on year. We have at national level 1.5% market share. Okay,
Uh,
massive opportunity for us to scale up business multifold from here. We are just in the beginning of the journey. In fact, I would say in 5 years we are just proven the business model. The real game is about to be played.
Makes sense. All about the scale, economies of scale, a distribution network led business. So I think we wish you all
And
the
technology. In supply chain business, there are two things that matter, which gives you an edge, which gives you, one is scale, because scale is difficult to replicate for anyone, because
yes.
customer service, anything you can replicate, but scale is difficult. It takes a lot of time and effort to build scale, right? So number one is that. Second is technology. Any supply chain business, whether it's Amazon, whether anyone, right? Scale and technology, that gives the leverage, that gives you the edge.
Absolutely. So I think worth watching that. Thanks a lot, sir, for coming on the show and giving us insights. And we give you all the best wishes for your upcoming IPO
Thank
and your
you.
listed.
Thank you, Piyush. Thank you so much.
And dear viewers, that was about the business. Hope you enjoyed it. For now, it's a wrap on this conversation.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.